Good morning, good afternoon, good evening, and good night. You're watching Crypto Hot Seat on Token Metrics TV. My name is Dylan Love. I'm the managing editor of cryptocurrency research firm Token Metrics. And today's a big day. We're joined by Mark Yusko of Morgan Creek Capital Management. Mark is an American investor, hedge fund manager, and philanthropist. He's the founder and chief investment officer of Morgan Creek. Mark, welcome to the show.
Thank you for having me, Dylan. I'm actually super excited about this. And one quick apology. I had a really great plan this morning. My wife's out of town. I'm playing Mr. Mom, take my son down to his carpool. And the other mom comes out and says, "Oh, Caleb's got a cold symptoms today, so I'm going to keep him home." Silence. I'm like, and you're still taking my son to school because I have an 8 o'clock that I have to be at. And she didn't say anything. So, okay, I guess I'm driving my son to school. So I'm racing to drive him to school. I get home, but I didn't have time to shower. So I'm rocking this stubble, not because I'm cool, but because I'm unwashed today. So
No worries. I
apologies.
feel like the remote paradigm that we're all living in today means we get to know each other a little bit better than we might if we had to gussy up in an office all the time. But at any rate, we're happy you could join us today.
No, excited
I
to be
wa
here.
Thank you, man. Yeah, I wanna talk about, let's talk about Morgan Creek and crypto. I'm particularly interested in the fact that that your fund advises pension funds and endowments, but
Yep.
you're also into crypto. It seems like, we had some employees coming out of the Digital Asset Summit that were talking about some new interesting little overlaps between pension funds looking for crypto exposure. Have you had any of those conversations yet?
Oh, 100%. Look, I mean, we are where we are because of the vision of an amazing CIO at a public pension fund of all things. And the quick backstory is, look, I came into this business out of the traditional markets. I worked for an insurance company, then an asset manager doing equities. Then I went and worked at my alma mater at Notre Dame and helped run their endowment. Then I ran the endowment at North Carolina. Formed Morgan Creek 17 years ago to bring that endowment model to others. What does that mean? It means think beyond traditional stocks, bonds, and cash. Think about alternative investments, things like hedge funds, things like private. Invest in innovation as an asset class. And throughout my career, the most money I've ever made is investing in something that I believe in or that others believe in before others understand it. And you always find yourself doing that in places like venture capital. So we've always been overweight venture capital. We've done a series of venture capital funds. 8 years ago, good friend of mine, I was on a panel with him at DAS the other day in New York and did a Real Vision thing with him today as well. Dan Moorhead, he said, "Come into San Francisco, I'll buy you dinner." And he said, "I'm going to spend the rest of my life on Bitcoin and blockchain infrastructure." And I was a dork 8 years ago. I didn't get it, hadn't done any work. I was a skeptic like everybody else. And actually, everybody I respect starts skeptical, then does the work, and then gets wildly bullish. But I hadn't done the work yet. And, but infrastructure, I got, and I immediately got it. And then I started asking clients about it. And they're like, "No, go back and do your job. We'll fire you. Don't talk about magic internet money." And so I kind of got delayed until 2016, 17, where I finally said, "Nope, this is big. This is an evolution of technology that is not going away, that is foundational for the future." And what the internet did to media and commerce, blockchain is going to do to financial services. Financial services
Mhm.
is orders of magnitude bigger than media and commerce. And so this is the biggest transition in terms of computing power and technology we will ever see in our lifetime. Well, my lifetime, probably. You guys live a long time. But um, so anyway, that's a long answer to a simple question, which is, how did Morgan Creek get involved? So 4 years ago, Morgan Creek Capital Management set up Morgan Creek Digital. Morgan Creek Digital focuses solely on digital assets. I don't like the term crypto because crypto has this negative connotation, and all it really
Mhm.
means is cryptographically secure. Charlie Munger says, "I don't use anything with the word crypt in it." I'm like, "Yeah, fine, whatever, haha." But cryptographically secure is important. But what's more important is the underlying fundamental technology that is blockchains are simply an operating system. And they're the
Mhm.
operating system for the trust net, as I like to call it, which follows the internet in 96 and the mobile net in 2010. And in 2024, we'll have the trust net. And everything will be connected in a trustless way, powered by blockchain technology. And once I had that aha moment, I was all in. And I've gone from spending 0% of my time 8 years ago to basically 100% of my time today in the digital asset space. So long answer, sorry.
No, it's all good. It's all good. I wonder, at the risk of talking a little bit out of school about somebody, you have a former colleague, Anthony Pompliano. What role did he play in getting you up to speed in crypto, or maybe you helped him get involved?
Look, no,
What's your sob story?
not off limits at all. Pomp and I are buddies. We talk every week, sometimes even more. Pomp is certainly part of the story in the sense that uh, I had this notion of doing something in the space in 2016. We were going to do it our old fashioned way. We work with pension funds, endowments, foundations. We were a manager of managers. So we'd farm money out to external managers. Then we had a culture of co investment. So we would co invest in the deals side by side. And make a long story short, I met Pomp in a couple of different ways. We co invested together in a deal called Lyft, worked out okay. And then we met again on some other stuff. And I started following him on Twitter. I'm like, and I said, talking to Pomp is like talking to myself, younger, better looking version. But, I have a face for radio, but it was great. And so I was like, we should work together. And we met for breakfast, turned into lunch, turned into dinner, turned into the next day. And next thing you know, we were partners. We formed Morgan Creek Digital together. We're general partners, formed Funds 1 and Fund 2. He got tapped by Naval to go do this solo VC thing. He came to me and said, look, Naval called. I think I want to do this. I'm like, dude, if Naval called me, I would do it. I would quit my own firm. So go do that. Downshift to venture partner. So he and Jason are venture partners on our third fund. I brought in 2 new general partners, Such and Xavier. It's great. We're raising our third fund. Said, still talk to Jason and Pomp every week. We still exchange ideas. We collaborate. And it's awesome. So all good.
Right on. It's really exciting to hear you talk about crypto basically occupying 100% of your professional time. But I wonder, internally at Token Metrics, we have this term legacy markets, anything fiat, the stock market, and so on. So to put this all to a question, um, the legacy markets, that's where you built your wealth. What kind of attention are you still giving the legacy market these days?
Fantastic question. So you do the math and you're like, okay, if you spend 100% of your time on this space, what happened to the rest? Well, the great news is I built this business over 17 years, and 17 years ago, I hired a bunch of young people to help me with, we have a China office that does Chinese growth equity, and we have a hedge fund business, and we have a venture capital business, and we have a traditional kind of advisory business. And now those 24-year-olds are 40 and they run those businesses. And I'm still the CIO and I still do big top down stuff, but they run the businesses, and that's exciting. And then I've got this incredible infrastructure. I got a COO, I got 2 CFOs, I got salespeople, I got IR people, I got a chief compliance officer. And so I have this great platform at Morgan Creek and a brand that people recognize and trust. And that allows us to cross the chasm, right? You ask about pensions, right? How did we get the first public pension fund, or actually 2 of them, to invest in crypto in 2018? Think about that. That was, only 3 years ago, but it was, millennia ago in terms of adoption and comfort. And the way we got them is we went up and we met with the board, and they had visionary CIOs, Catherine and Andy, that said, look, we believe in this, but you got to convince our board. And they looked and said, all right, guy's got white hair, he's old, we trust him. Anthony's young, seems to understand the tech. It's a good combination, young and old, and we won their trust. And if we're talking about the trust net, then it is all about trust. It's all about confidence. It's all about believing that we're aligned in interest. So yes, I now for the first time the other day called myself a venture capitalist. Right? I used to be a stock analyst. I used to be a CIO of an endowment. I used to be the CEO of an asset management firm. Now I'm a venture capitalist. I'm having more fun today than I've had in 30 years. Not because I didn't love my last 30 years. I loved every day of my career. It's awesome. But I live in chapters. So chapter 1, work for not-for-profits. Chapter 2, built a nice asset management business. Chapter 3 is all about digital. In fact, I found a clip the other day. I was actually searching the term tokenize the world. Like who did that hashtag? I did in 2018. And I found the first use of it. And it was linked to a CNBC appearance that I did, and the host said, so what are you going to do? There's all this, turmoil about the space, and it's kind of sketchy, and you're known as this, buttoned up, traditional finance guy. I said, well, I am that, and I appreciate that, and I take that as a compliment. But I'm going to spend the next 2 decades tokenizing the world. And what that means is I'm going to embrace this technological evolution that is going to migrate every stock, every bond, every currency, every commodity, every piece of art, every piece of real estate, every private business, every asset of value in the world is going to be tokenized. It's going to trade across blockchains 24/7, borderlessly. Okay. No more will the markets be closed more than they're open in terms of hours. No longer will I try to transfer money from my bank account to my Coinbase account and get a 10-day hold.
Yeah, yeah.
10 freaking days? Are you
Yeah, yeah.
kidding me?
It's gross.
I
Gross.
mean, crazy. So I'm going to embrace all of that. And I think, okay, and I don't want to speak out of school, and I say this all humility, I think just because we've been around a long time and people know us and trust us, they're like, well, if that old guy can get it and I trust him, if he can get into this, then maybe I should dip a toe in. And look, my other hashtag is get off zero. 5 years from now, I used to say 2 years ago. So now 3 years from now, we will look back. And as fiduciaries, you will be deemed fiduciarily derelict of duty if you have zero exposure to digital assets. Think about that. Fiduciaries, it will be wrong. Right? Today, people are like, oh, maybe you're violating your fiduciary duty if you have any. No, get off zero. Hashtag get off zero. Zero is the wrong number. I'm not saying 100%, but you have to have more than zero. And you have to have a couple percent in liquid protocols. You have to have a few percent in venture capital and invest in innovation. And I'll give you one funny story. So when we went to that pension funds board meeting in 2018, so 2.5 hour meeting. It's actually a good thing because it means they're asking all the hard questions. It's a police pension fund. We get to the end, the chairman, okay, big table, big room up in DC, and he's in uniform, Harley outside, helmet and gun on the table. Couldn't make this up, right out of Central Casting. He says, all right, Mark, I hear everything you say, but you're telling me I got to go tell my guys that I just put their retirement in drug dealer money? I'm like, no. Okay, I see your point. No, what you're going to tell them is you're a fiduciary. And as a fiduciary, you and the board have to earn 7.25%. In a 2% interest rate world, that is very, very challenging. The only chance is through alpha, manager skill, or the illiquidity premium, investing in innovation, venture capital. That's what we're doing. It's like, all right, I get behind that. Next day, Washington Post, pension fund invest in drug dealer money. And he was quoted word for word saying, no, we are fiduciaries. Our job is to earn the actuary assumed rate. The only way to do that in a 2% interest rate world is through alpha and investing in innovation. This is venture capital. This is the future. We're excited. Now, the fact that they've made almost 8 times their money on that in 3 years, it's good. And I feel good for them. And I get great psychic income knowing that the beneficiaries, that those policemen and those first responders get huge benefits from that, adding to the value of their pensions. So again, I probably answered a question you didn't ask, but
no,
I like
that's
this.
beautiful. That's beautiful. I want to ask you, you're kind of happy to characterize yourself as an old guy. So if I can, this question is for that character in you. You've carved a pretty deep path over the course of your career in the world of finance. What would you say to a young person who looks at that path and wonders how to take it even farther? Is this should that young person be focused exclusively on digital assets, or is there still a role to make a dent in the legacy markets, as we call them? Or maybe it's holistic.
Great question. No, it's a great
Please,
question. So I would
take
say,
it.
one, don't do what I did, right? I played it safe. I'm a dutiful firstborn. I do what I'm told. I don't take big risks, and you should take risks, particularly when you're young. That's when you should take the risks. You should join startups. You should pursue big ideas. I worked for big organizations, safe, paid the bills, allowed me to be comfortable. But the best opportunities don't happen in comfort, right? Return and comfort are the enemies of one another, right? You can't make big returns if you're comfortable, and vice versa. And so I would tell young people to take a lot of risk. And what I mean by risk is not just haphazard risk, like I don't get bungee jumping and skydiving, but take risks where you're compensated adequately and fairly, and calculated risks, right? Investing is all about taking intelligent risk. If you take no risk, you get no return. You stay in the risk free rate, hence the term. And we can take credit risk, we can take equity risk, we can take liquidity risk. Here, you want to focus on innovation. So the big advice is, one, look at the four people you spend the most time with. That is who you will become. Choose wisely. So
Uh-huh.
really focus on picking great mentors, great friends, and stretch, right? Pick people that you admire, call them up and say, hey, can I have lunch? Can I have coffee? People say, oh, they'll never ask. If you don't ask, you can't get. Second is look forward, don't look back. So, yeah, there are still opportunities in TradFi and CFI, but the future is DeFi. The future is decentralized products and services. It's illogical that, look, I invested in every ride sharing company on the planet, from Quadi before it became Didi, to Uber, to Lyft, to Ola, to Grab, all of them. And we've done great for our investors. But it's illogical that those companies should take 30% of the revenues. Doesn't make sense. We can now have DAOs, or decentralized autonomous organizations,
Mhm.
own those services and replicate those services through technology, because it's just technology. And look, the Lyft algorithm is great, the Uber algorithm is great, but they're replicable. And the model of a centralized organization is old, right? It's
Yeah,
ancient
yeah.
and it's going away. And I
So
heard someone describe the Dow as, not the Dow Jones Industrial Average, but DAOs,
DAO, got you.
the AO, decentralized autonomous organizations, as the greatest example of human collaboration in history. Like, wow, I thought I was good at hyperbole. That is hyperbolic, but
Yeah.
I think it's true. I actually think it's true. It is amazing to think we can have self-organizing systems come together and collaborate. It's like Bitcoin, right? We said, oh, what about a 51% attack? What about concentration of miners? I'm like, no, 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 no. Think about it. If you ever engineered a 51% attack, the moment you changed the blockchain, Bitcoin would be worthless. So there is
Mhm.
zero incentive to do the thing that you fear. It's absolute genius. It makes my mind blow actually sitting here thinking about it, that Satoshi, whoever he, she, they are, and I love there's a new statue in Hungary, probably my homeland, with a name like Yusko, that's dedicated to this immortal person or persons. And the genius of that element of Bitcoin is mind blowing. The genius of a fixed supply of an asset that will have rising demand, the genius of cutting back the miner rewards so that the price had to rise, which would attract more interest, the genius of not replacing lost or stolen, because that incents, it's basically an incentive, it's a gift to the community. All mind blowingly amazing. And so when you
Yeah.
take those constructs and you put them forward and you start thinking about all of the things that are happening in technological evolution and adoption and the community building, and how this trend will reverse the crony capitalism, the massive stealing of wealth from the poor and middle class that go up to the wealthy through inflation. The idea that inflation's good for you is such a crock of shit. I can't stand it.
Mhm. Mhm.
And it's been going on since 1913. And I do this weekly roundup podcast with a buddy on Blockworks, and um, I know I've been doing it for 3 weeks, so it's not like I've been doing it for a long time. But we had this great chart this morning. That was the thing I was trying to make at 8 o'clock, and 800-year chart, awesome, right? And the cool thing was, first 700 years, perfect 30-degree line inflation, right? There was a natural growth to economies and innovation. And that's where inflation came from. As things got better and living standards improved, and the world got a better place, there was normal inflation and everybody benefited. And then starting in 1913, you had this massive inflection and went to 60%, 60-degree line. That
Mhm.
is theft. That is theft of wealth by the masses. I mean, by the few from the masses.
Yeah.
And that inflation, right? Like I came back from the Digital Assets Summit the other day, came back through LaGuardia. And for the last 10 years, I've been going to the Pat LaFrida's hamburgers at LaGuardia. Second best hamburger after Shake Shack. And 10 years ago, it was $6. Then it was 8. Then it was 12. The other day, on Wednesday, I paid $21 for a
Yeah, yeah.
freaking cheeseburger. That is theft. And people say, oh, but the Dow's at an all-time high. No, it's not. It's only at an all-time high if you denominate it in dollars. If you denominate it in Fed balance sheet, it's dead flat since 2009. If you denominate in gold, it's dead flat since 1996. If you denominate in Bitcoin, it's down 99% in 12 years. So we have to get away from this idea that the dollar or the dollar, which we stole from Holland in the 1700s, is this unit of account that is incontrovertibly or incontroversially good. It's not. It is a devaluing asset that governments use to justify spending to enrich themselves. And every empire in history has done it. It's not just the American empire. Every empire in history has done it, and every empire in history has fallen. And this one is in the process. And that's why opting out with a portion of your wealth is so important. Again, bunch of questions you didn't ask, but
Yeah, no, there's a
that.
lot to chew on there. There's a lot to chew on there, and it's all good stuff. Thank you for all your insights there. Where to go from here?
Well, unfortunately, we'll probably have to do a part due because I do have to run. But is there anything that you prepped for that I just washed
Well,
away
2
by
maybe we
talking too
can
much?
go out on 2 quick things here. First question is, what's your new podcast? What's it called, and how can people track it down?
Yep. So on the margin through Blockworks, and that's I think it's released every Saturday morning. We record on Fridays, released on Saturdays. We also have some Morgan Creek stuff. I do one called the SPAC Edge, which talks about why I think the SPAC market is the preferred method of going public for high growth innovative companies. I believe in innovation as an asset class. We also do one called Hedged with a capital D. That's our hedge fund team that does that. And then I've been on a whole bunch of other ones, but those are
Mhm.
the 3 that I'm most active in right now.
And then the only other thing that I didn't get to ask about was you're out there as quite the philanthropist with the Morgan Creek Foundation. You also give quite a bit of money to your alma mater. I wanted to invite you to talk about any of your philanthropic activities.
Well, I appreciate that very much. And look, we all heard the Bible verse to whom much is given, much is expected. Look, I believe in I'm a Catholic and I went to Notre Dame Catholic school, but I actually believe in Catholic with a little c. I am a Catholic with a big C, but I also believe in Catholic with a little c, which means universal. And what it really means to me is living a life of servant leadership. And all of us can lead. In fact, I was at this great thing once with this leadership guru, and 200 people in the room. He's like, all right, everyone raise their hand. So do it with me. Okay, repeat after me. I will never,
I will never.
okay, teach a child to read. Come on, say it. Say
Teach a
it.
child to read.
Okay, there you go. Because you are capable of building an organization to teach 1,000 children to read. I was like, oh my God,
Ooh.
that's so powerful. It's so powerful. And it doesn't mean that no one should do individual tutoring, but what it means is servant leadership means thinking beyond the single thing, right? You can give food to a food shelter, but you should ask the question, why does hunger exist? Why can we have a country where we spend $20 billion a year on weight loss and we have 10 million children every night that go to bed without enough calories?
Mhm.
How is it possible? Right? We have to ask that question. So philanthropy to me is incumbent for all of us. And there are lots of ways to be philanthropic: time, talent, treasure. You can do any of those. And I try to do all of them, right? I get together with my scholars at Notre Dame a couple times a semester to give to them as mentors and try to just get them to think big ideas and to kind of put aside the, hey, I just want to be a consultant or an investment banker, and maybe there's some other things to consider in the world, or maybe a career in blockchain capital or crypto or something. But for me, philanthropy is giving of yourself. to help organizations get better or excel, right? And I think about what we did with our scholars program. Our point was at Notre Dame, there were a lot of kids who were going to these other great schools because they didn't view Notre Dame as equivalent, right, in terms of quality. And we're like, well, okay, but how about this? How about we create a program where you get all the resources? And I describe it, yes, I can go to Harvard or Yale or Princeton and basically fly coach. So you're as good as all those other kids there. Or you can come to Notre Dame and we'll put you in first class. And it's not that the seat's better and the food's better, it's the people you're around, right? The people that spend the money to fly first class are actually people you want to know and people you want to hang out with. It doesn't mean the people in the back aren't. It's just there's a self-selection mechanism. And so
Yeah.
we built a program we stole the program because good artists borrow, great artists steal, so said Picasso.
Sure.
That we copied it from the Moorhead, who copied it from the Rhodes. And the idea is if you attract the best and the brightest, right, the absolute best and the brightest, not the smartest, right, not the smartest SAT, not the most reward or awards, because leadership is not achievement, aptitude, or ability. It's a state of mind, right? It's an ability to engender followership. It's to have vision. It's to be able to think beyond, to imagine the unimaginable. And so what we're trying to do is encourage that type of thought process. And if you take that broadly to philanthropy, all of us can be philanthropic every single day. And that doesn't mean dropping $1 in somebody's coin as you go by them on the street. You can do that, and that's great. But there are so many ways that you can be philanthropic. You can mentor somebody. You can be on somebody's podcast and help them build and educate. You can build a great business and employ people. I mean, there's so many ways to think about it. And I said, for me, it's just what's expected. And I think part of that is, having good parents and having good values, attitudes, and beliefs are what shape us as people. And character is what you do when other people aren't watching. All those are platitudes and sound, but they're real. And, Father Moreau founded Notre Dame, where I went to school, on this basic belief that you need to educate the mind and the heart. And I think that's so important. There's not just IQ, it's EQ. It's that compassion and that empathy and passion to do what you care about. Like I say all the time, I haven't worked a day in my life. Right? Cliche, but I love what I do. I've loved everything I've done. That's not working. That's doing what you love. And if you're fortunate to be in that position, then how can you not want to give back and make that opportunity available to others? So again, way too long an answer, but it is something that I really love talking about because and I really appreciate you asking the question.
That's Mark Yusko of Morgan Creek Capital Management. What kind of world would we have if more hedge fund managers talked and thought this way? A real pleasure chatting with you, Mark.
No, thanks, Dylan. Really appreciate it. We'll do a part 2 sometime.
With great pleasure, man. Till soon.